Welcome to Sykes, the Bottom Line Pharmacy Podcast, your regular dose of pharmacy CPA advice to fuel your bottom line, featuring pharmacists, key vendors, and other innovators.
Your checks, yes, you can call me, because we the best, Sykes and Company. We the best, Sykes and Company. Your accounting is a mess, there's no need for you to stress. Go online and request from the best. We the best, Sykes and Company. We the best, Sykes and Company, yes.
We are live here at the Red Sail Connect Conference. Kathy, we've had a busy show.
Yeah, we have. We had over 200 in our 1 hour session yesterday. A lot of interest in the tax bill, 340B, trying to get some integrity into the reports that we're seeing from our customers, our clients, even our non-clients. A lot of really good questions.
A lot of good questions. We had an hour-long talk. We spoke about, of course, fundamental accounting. If you see any of our content, fundamental accounting is our go-to, and then we dive into little subsets of that, one of those being in 340B.
Yeah, we did have a lot of questions on 340B, starting with contracts, making sure the contract is written to your benefit, how to record the money that you're turning back over to the covered entity at monthly or bi-monthly, accumulators, how that impacts your balance sheet, as well as making sure that your fill fee, your dispensing fee that you're getting back from the covered entity is equitable. Are you making enough money to make it worth your while to be involved?
We also hit some KPIs around that, measuring that I like to measure the success of your 340B. We talked about the accounting intricacies, which are pretty in-depth outside the scope of this conversation, but there are some 340B accounting intricacies to be aware of. We also talked about the tax law, the upcoming tax changes, and the takeaway there was, who the heck knows? And today's June 7th, so who the heck knows what's going to happen in Congress and what they're, Lord only knows. But
there's been a lot of drama for sure.
Yeah, we're just coming out of the Musk and Trump battle, but I can tell you that the taxes are going up at the end of the year, so there will be something. And what that something is, we have somewhat of a blueprint with the big, beautiful bill. And one of the key things in there that I'm watching is the SSTB, the Specified Service Trader Business rules, and the 199A rules, which is the Qualified Business Income Deduction. That's set to go from 20% deduction to 23% deduction, and there's going to be some changes in the pass-through entity tax as well.
And the states, how the multi-states can impact a benefit for you as well.
Correct. And so pharmacies really need to be paying attention to that. That is going to be a big issue. Could be six figures for some pharmacies in terms of tax. So we'll be monitoring and updating pharmacies as we hear about that. So we dove into that a little bit more detail. And also we attended a few sessions ourselves, Kathy. Yeah. I went to the Jeff Harrell multi-ownership class, which was phenomenal. What he does and how he does it is the right way, and he knows what he's doing. So he shared a lot of great information about scaling multi-ownership, operational efficiencies, revenue diversification, all that. So that was really good.
Yeah, and I went to one of the PSAO meetings, basically listening to them and trying to get an understanding of where they fit between the pharmacy and the PBMs, and clarifying that, because there's a lot of blurred lines in what they do and what they will not do, and making sure that the pharmacy understands the limits that the PSAO can play in that game, because there's a lot of blame game going on right now. The PBMs are trying to deflect a lot of the blame back to the pharmacy, back to the original contract, back against the PSAOs. But when you really listen to the PSAOs defend themselves, there's some very clear lines that they don't step over, and really good content.
Yeah, that's always good stuff. We also had to follow up. Our talk was following up behind Trent Thiede with Pass National. And what a resource that guy is. So
he's a walking encyclopedia.
He really is. So he's a really good resource for PBM audits and things like that. And we enjoy working with him as do our clients. But so far, it's been a really good show, Kathy. And we got a little bit more to go, but glad to be here. We appreciate Red Sales having us, and we're honored to be able to speak in front of our pharmacies out here.
Yeah, and remember, this is all by invitation. They bring in the people they want to be here to work with their clientele. So it is quite an honor to be asked, and especially asked to speak. Well, they would probably take advantage of it if their CPA understood the reg and checked the right box on their behalf.
It's very confusing.
Yes.
Because the rules say a pharmacist is a service business, an SSTB. But if you go into the final regulations, the details, and read through the 300-400 pages, you'll see that a retail pharmacy in general is not. So CPAs that don't know the industry will read just, hey, the surface level will say a pharmacist, you're an SSTB. And that's where the issue comes in. They're not diving deep. They're not looking into it. They don't know. And that's where you fall into issues. So that's what we're here for, to help you.
Even the class you were in the other day, a national speaker addressed it incorrectly.
A national speaker said, right, they did exactly what any other CPA in general would do. They'd read the surface level and say, pharmacist is a service business. Retail pharmacy is a service business. And then you get into those regs, which she didn't do. She probably doesn't work with pharmacies. It's not necessarily the case. So you got to be careful there. NCPA has some content on this. We have content on this. But this is going to be a really big issue, because this SSTB designation is severely going to limit you going forward if this bill passes in its current form. And we're talking big tax dollars. So it's got to be paid attention.
Well, if somebody were to look back at their returns and see that box is checked, they need to go back to their preparer and get some amended returns.
You can check to see if you are an SSTB on your tax returns, or you just need to reach out to your CPA. But something you want to definitely check. And if you are classified as an SSTB, you need to make sure whether that's right or not, because there are technicalities to it. And then you need to then potentially consider amending the tax returns, which we have done in cases when it's significant. So
you talked a lot about based on like where it stands currently. What are like the top 4 or 5 things we see at DEI? 4 or 5.
So the QBI is definitely one of them. The other one is I'm paying attention to the cash accounting changes potentially. Right now, the cash accounting methods available in general, everything's in general. You got to know your rules.
That's right.
Situation. But the cash accounting is in general allowed for gross receipts under $30 million. You do have to consider controlled groups for multi-owners there.
And basis.
But they're looking to push that to 80 million, but it's only for manufacturing. So we'll have to see what the final product is. But we'll be digging into that regardless, whatever happens, because if we can get the 80 million, a pharmacy to 80 million on that, it could be huge for a lot of pharmacies. multi-store owners and things like that. So I'm watching that. I'm not expecting that to really change, though. I'm watching, I mentioned the pass-through entity deduction with the QBI SSTB stuff. So right now there's a SALT cap, state and local tax cap, on your itemized deductions for local taxes, state and local taxes, and it's $10,000. Well, they want to push that to $40,000 as it's written today, and then which would be pretty big, but there's going to be limits to that based on your income. And then they want to, what you saw a lot of pharmacies do, because you had a $10,000 SALT cap, what you saw pharmacies do is they paid the state tax on the entity side, the pharmacy side. They got the deduction. That deduction lowered their federal taxable income, and so they're going around this SALT cap. They're already lowering the taxable income. SSTBs are going to be limited there. That's why this other SSTB issue is so important. The other thing I'm looking at is the R&D tax changes, where we can expense research and development costs, which that has bipartisan support. That's pretty much going to happen. So that means if you're doing research and development, you don't have to take those expenses and move them to the balance sheet and increase your taxable income. You can expense those as you incur them, which is how it used to be done until the last several years that changed. So the R&D tax credit is really back on the table pretty aggressively for pharmacies that can take advantage of it, and compounding and things like that.
But that all circles back to making sure you've got good integrity in the numbers at year end. You're addressing inventory early. Don't wait to address your inventory in December. You need to address inventory in August, September, October, so you have time to address that change in that physical count. Perpetual inventory is great, but you do need to make sure that it's accurate to what's on your shelf, and making sure that what you can return, you get that back to the manufacturer or the return solution company. Get it off the shelf, get your money back, because that's a lot of money sitting on the shelf. Keeping your receivables and payables accurate is super important. Those initial building stones start that tax work, and making sure that those numbers are accurate to begin with gives Scotty what he needs on a monthly basis and year to date to work in that planning arena early.
Yeah, you got to have the fundamental numbers, and that's why we start every conversation with it. Without that, you can't do a lot of these tax things we're talking about.
Nope.
So you can't plan and navigate the tax landscape if you don't know where you are in the pharmacy. So that's why we're so keen on those fundamental numbers, and not only just from a tax standpoint, from an operational standpoint as well, using your accounting as an asset in your business to grow, change, adapt, etc. So very important point there.
It's interesting too. You talked about 340B. A lot of technicalities on the 340B. One of the most questions cost of goods.
You mean coding it incorrectly. It's one of those little things that if you really stop and think about the invoice that you get from the third-party administrator, the covered entity, where you have to remit money back to them. When we get files in from prospective clients, 95% of the time, those bills are coded to cost of goods sold. But when you stop and think about it, there's very little associated with 340B that is actually cost of goods sold. So there's a special way that we look at recording those invoices to keep your cost of goods sold accurate, to keep your revenue as accurate as possible, to maintain the integrity of that gross profit margin, and record those fill fees correctly on your profit and loss statement, as well as making sure you know what those accumulators are in the back of those third-party administrator reporting opportunities, so that if that's part of your contract, that you're addressing it properly on the balance sheet, because it can be a big number.
And every pharmacy is different,
That's right.
Every
Those
contract's
contracts are
different.
crazy.
Your contract will kind of dictate how that accounting should happen.
Yeah.
And it varies, but
Yeah.
something to definitely you got to pay attention to. Okay, Kathy. Well, we again, it was a great show, and we're delighted to be here. Appreciate you listening in.